Hello, I'm Hickey for the Kaka. This is my podcast and video that goes out via email newsletter on Substack through an email newsletter called the Kaka. It's all about Aotearoa's political economy around housing, climate and poverty. Now, one of the enduring themes of the last 3 decades is that governments of both sides of politics, National and Labor, have adhered and hardly ever debated the overall fiscal framework, which says that New Zealand's government, the Crown, shouldn't have debt above about 30% of GDP and should keep the size of government below 30% of GDP. And this is something that is effectively the North Star, the thing that drives everything in government, particularly when that debt level and the size of government is over 30% of GDP, which it is at the moment. Treasury has said, and it's been accepted by both National and Labor finance ministers, that when you have government debt of over 30% of GDP, there's a risk that financial markets will refuse to lend you money when you need it, and that mortgage rates and interest rates will go up as a result, and that you'll potentially get into a spiral where interest rates go ever higher, the cost of that interest goes ever higher, the debt goes higher, the interest goes higher, yada, yada. You get the picture. And this is because it's sometimes in our past, and even that is debatable, we have had large amounts of foreign debt and a fixed exchange rate currency, and this debt had floating exchange rates and had floating interest rates. So that meant there was a risk that when our currency fell at the same time as global interest rates rose, the interest bill on that foreign debt would be explosive and high, and before you knew it, we couldn't pay it. Now, there are some who argue we were at that point in 1984 when Robert Muldoon left, or initially refused to go, eventually left, and we were there in 1990 when the new national government came in with Jim Bolger and Ruth Richardson. But things are different now. The New Zealand government issues its debt in New Zealand dollar bonds. Now that's important because when you borrow in foreign currency, you have to pay the interest in foreign currency, which means you have to earn the money in foreign currency. That's not the case with the New Zealand dollar. The New Zealand dollar, because it's a fiat currency, can effectively be printed. Now, that's not going to be great for your inflation rates, but it means the government can service its debt if it needs to. Also, the risk of interest rates sharply rising on international markets or the currency falling are irrelevant when you're issuing your own debt in fixed interest rate securities in New Zealand dollars. So when the government issues a bond, let's say the price is 4%, it's 4%, whatever the case, for 20 years or 10 years or 5 years or whatever the length of the bond. And so the risks of a blowout in your debt and going bankrupt, so to speak, are much, much lower. Now, even if you think that there isn't a near and present danger of a bankruptcy, if you like, or our credit rating being cut or not being able to access international markets, you could say that having lower debt is good for interest rates overall. And it's true, if the government is borrowing lots of money, that will tend to increase interest rates, particularly at the longer end of the bond market. And that means for those people who are borrowing mortgages, because often those mortgage rates are based on those long-term government bond yields, that their interest rates will be lower or higher, depending on how much money the government is borrowing. So that's the background to this current debate that we have. In fact, it's not really a debate, it's just a bunch of assumptions that aren't debated in everything. So debates about whether there is enough funding for hospitals, for schools, for housing, because the government has taken quite a hard line on this issue of the fiscal framework and is again trying to reduce government gross debt to under 30% of GDP, to so-called bend the debt curve down. And as we see regularly now, the government is saying during pay negotiations with teachers and with nurses and doctors that there just isn't any money left, that we're close to our fiscal limits and that higher pay cannot be made, and we'll just have to wait for extra investment in emergency departments and the like. However, what they're essentially saying is that they are preferring to not borrow and to keep interest rates low rather than borrow and perhaps increase interest rates a little bit. We're talking a few basis points. And that is a choice. That's a political choice because we're nowhere near some sort of trigger for some sort of crisis. And I'll show you exactly how that's the case. And it might surprise you. So let's have a look at a story that's just popped up in the last day from One News last night. This is a One News story quoting doctors from the Christchurch Emergency Department who have written a joint letter to Health NZ pleading for more funds, more staff, more space, because they are now regularly so overloaded that every day they are in the so-called red zone. And what they're seeing is that some people are waiting so long in the emergency departments that the doctor quoted there is saying that people have left and have died in the car park. He says, Dominic Fleischer, who is the Christchurch Emergency Department doctor, to One News, patients are dying now really because of substandard care. Patients dying in the waiting room and corridors, or who leave and literally drop dead in the car park. He says the current plan to deal with overloads is to put up a tent outside the emergency department. But even that is not sufficient because there's no staff to work in the tent, he says. Now, Health NZ said in the article on One News last night that the system was safe. Although when the emergency doctors say that people are dying in the hallways and being forced to leave the ED and dying in the car park, it doesn't sound safe to me. And Dominic Fleischer is saying, here and now, we need more resources. Emergency departments across the country need more doctors, more nurses, and more space. Now, there's a long-term history here of underfunding our health system, particularly given the high population growth that we've had in the last 20 years or so. And I wanted to show you what that underfunding looks like as a percentage of GDP. So there's various different measures of GDP, and those who have watched this podcast in the past will know I've looked at the various ways that it's measured and also the claim from the government that that New Zealand was already spending about the same as the OECD. It's not. And this chart shows you that over time, the cost of our health system as a percentage of GDP has risen from 5.5% to around about 6.5% between 2000 and 2009. It then fell from 2010 to 2020 because the government of the day put effectively a sinking lid on health spending. And that included the government of 2017 to 20, the Labour government. Now, during COVID, people realised that the desperate underfunding of our health system needed to be rectified if we were going to get on top of COVID. So there was a lot of spending that went on in 2020 and 2021. Some of it was short-term one-off spending on COVID vaccines and the likes, but some of it was in just getting pay rates up to levels which meant that not everyone left as soon as the borders opened. And the government has come in and said, okay, that's too much. We're going to put the sinking lid back on health spending. And the forecast the government has is that they will take it back under 6.5% of GDP. The problem here, though, is that healthcare spending should be rising as a share of GDP. And the reason for that is increasingly we're finding brand new ways to solve health problems and cure cancer and use all sorts of expensive medicines, and you see that play out in the debates over the Pharmac funds. But also an aging population means that the costs of running a healthcare system are just naturally going to rise as long as we have an aging population. And so when you forecast a fall in the state health share of GDP from 7% down to under 6.5%, what you are talking about here is a massive sinking lid and constantly squeezing down on spending. Now that means only paying doctors and nurses a 1% pay increase, effectively a real wage cut, delaying spending on infrastructure. We've seen, for example, a 2-year delay in the opening of the Dunedin Hospital. And that is how the government tries to keep the size of government under 30% of GDP and get the debt back down by not borrowing and by constantly having a sinking lid. Now, the argument is, well, we're just finding efficiencies. This is just normal business as usual, trying to be efficient. But you keep squeezing the lemon for 20 years, eventually there's no juice left. And that's what our doctors and nurses are saying right now. That's what they said last night. Now, here's just to show you where this is coming from. This is Brian Roach, the public services boss, or the public service commissioner. And just last night, he, again, in refusing requests for a pay increase for teachers, and the same for nurses, has said, we stretched our fiscal mandate to its limits, meaning we have no room left to move. That would give you the impression that the government is nearly broke and can't afford to borrow more to pay for this. But that's simply not true. And I wanted to show you that. So New Zealand's gross debt as a percentage of GDP is barely half that of the OECD average, at under 50% of GDP. It's currently around 45% of GDP. It's actually risen substantially during the last 2 years because the current government has borrowed substantially to pay for nearly $13 billion worth of tax cuts. And that means that New Zealand has actually low debt compared to the rest of the world. Now, that's also gross debt. If you were to include the assets that the government has in, for example, the New Zealand Super Fund and ACC, both of which are there to pay for future ageing population healthcare costs, very much public costs. And those assets are, by the way, incredibly liquid. They're mostly in stocks and bonds globally, which can be traded. That is something people should know about when they think about our gross debt. Also, those assets produce interest payments and dividend payments. And actually, when you look at the real share of spending by the healthcare system versus the OECD, which is the government's claim, you've got to take into account that some of our measures that we declared to the OECD include GST, whereas the OECD ones don't. And also, our spending on COVID happened quite a bit later than the OECD spending on COVID. So comparing apples with apples here is not appropriate. There's a very good feature today from Daniel McLaughlin at The Listener on this issue of our healthcare system. And just looking at the papers this morning, the government, knowing this One News article was coming, have announced $100 million in upgrades. Now, this isn't new money. This is money that was actually announced in the budget. It's just been pulled together and put into a press release. When you look at the Post, it's going with a story that there's lots of savings to be made by bringing together IT systems. Good luck with that. And the Waikato Times leads to an interesting story about how flood maps are now affecting the sales of properties as people look to potential costs. And in the press this morning, we have the CBD parking permits talked about, an issue there. Obviously, there's a lot of housing that's gone up in the central part of Christchurch, much of it without car parks. And there's a big contest going on now for those car parks and the potential that residents who are in these townhouses and apartments would get permits to park, in theory pushing others out who are driving in from the suburbs. There's some good news though, a big co-housing project announced in Christchurch. RNZ is leading with a scoop on the detail around Jevon McSkimming's downfall. And also there's various bits and pieces of news about a surge in demand for free healthcare clinics. Again, part of the problem that we have. There's One News's main front page, personally I think underplaying their scoop from last night, which wasn't their main story and should have been. This is an extraordinary piece. I'm Bernard Hickey. That was a chorus for the kaka on Monday, September the 22nd. Now, if you're watching this, it's because I've put it up in full for everyone to see. Usually the detail in my choruses and in the picks and mixes, the key details in the news of the day, is only available for paying subscribers. But again, given the mandate I have for doing this sort of journalism in the public interest, I've opened it up for all to see. Ka kite anō.